Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Well, those were visuals from the Global Leadership Summit, which, of course, was held on the 7th of November, which is earlier this Friday. Through the course of the day today, we will play out, the voices, the opinion that we got, both from local leaders, India sort of based leaders, and, of course, lots of global opinion as well. This is Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, morning.
Hi, morning, folks. And so many voices, right? From the Friday event, from global investors to startup wizards to, of course, Indian entrepreneurs, policymakers, so on and so forth. And we'll keep getting those highlights. And also, we're starting at least the day with some positive news on this whole shutdown business because we've not had, US data flow out of there. So let's see if we indeed get the US government working so we get those numbers back out.
Well, should be anything you forgot, Jeevan.
Oh, absolutely.
Was the star of the day, huh?
Showstopper.
Marching everywhere, running along. Wow.
For those who that's Jeevan, basically. That's a robot. And, amazing, right? Just shows you how far technology is advanced.
Yeah.
And I think we started Bazaar with Jeevan saying...
Jeevan opened up the show.
Good morning,
yes.
hello and welcome to Bazaar. I think that's something. Okay, well, as I said, more as we go along through the course of the day in terms of opinion. But let's just start with what you need to know as we start this new sessions, right? A deal struck to reopen U.S. government. Well, at least the Senate agrees. So there is bipartisan agreement in the Senate, U.S. Senate, that the government shutdown needs to end. The Senate has agreed to fund the U.S. government till the 30th of Jan. Now, this needs to pass the House, that is the House of Representatives, and it, of course, needs to go up to the President's desk for his signature. And that is essentially when the government shutdown will end. So that is point number one. Now, U.S. stocks pulled back last week from the, there you go. So Senate has agreed, House needs to vote on it as well, and, of course, the President's signature. Remember, I think... reverberations of Mr. Mamdani's win in New York, I guess at some level also galvanizing the Republicans to, get some of this stuff going, right? And I think you will hear more, you will see more on the fiscal side. We'll talk about this as we go along. Now, U.S. stocks pulled back from last week. S&P was down about 1.6%, but it basically held on to the 50-day moving average. The Nasdaq was down 3% last week. It's the biggest weekly pullback since the Liberation Day week. So that was quite something. Just consider this. And I think this is going to be the test for the US. Microsoft is on an 8-day losing streak. It's the longest losing streak for Microsoft since 2011. Meta is now up only 5% on the year. Right? I mean, Meta, by the way, for the same period, that is YTD, has seen about 10% earnings revisions. Stocks up just 5%. You look at NVIDIA. NVIDIA has lost $500 billion in market capitalization last week, more than any other stock in the S&P 500. So, and this is the mega cap IT sort of tech AI-led juggernauts which have done so well and which have held up U.S. markets. I must say, And a bunch of factors around this, right? I mean, AI, growing AI skepticism. What is the return on invested capital going to be? Growth concerns, a less accommodative Fed, etc. at play. Remember, we got that sense from the FOMC that the next cut in December is not a given. But despite all this, just look at the earnings, how earnings are tracking in the US from companies which are reporting for the quarter. It's the strongest quarterly earnings season, broad-based, since 2021. So, corporate America is firing on all cylinders, and it's not just these 7 companies. So I think, you get this wobble once in a while that, well, is this it, etc. And maybe rightfully so. Naren, for example, S. Naren, who is the CIO of ICICI Pru, expressed that view, saying, well, the big risk for India is not local, but is global. This AI bubble bursting, as he put it. But are we there yet is the question. And to that, I mean, just one more point that, and I think it's a relevant point, that broader growth, corporate growth is looking pretty solid. Okay, now U.S. Supreme Court sounded skeptical of the Trump emergency tariffs last Wednesday's hearings. Remember, the oral arguments had opened. The takeaway is that President Trump essentially said that he will not announce new tariffs while the Supreme Court in the U.S. is the verdict is pending. So, a bit of a reprieve during this period. We don't know when the Supreme Court will finally come out and say what it wants to say. The odds have shifted in terms of what the market is expecting. Market is now saying, well, maybe the court will say these are illegal, is leaning towards that. And that is a big difference compared to from when the case started in the court. Goldman Sachs has upgraded India, and we'll talk more about this after its downgrade in October 2024. We've had a big downgrade. I mean, the reasons are pretty much the same: big underpositioning, tax cuts, rate cuts, etc., etc. We all know that. But this is a big global bank which has changed its view after they downgraded the market here, say around the same time last year. Just to tie in the levels here, Nifty broke the September highs on the downside, which is 25,448. This is the level we put out on Thursday. On Friday, intraday, we broke through it on the downside, but closed above it. So 25,448 is the first level. Below that is 25,400, 399 to be precise. It's the 40-day exponential moving average. So we'll see what happens. Bank Nifty, it tested and closed above the 20-day moving average, which is 57,578. The 40-day on the Nifty Bank is still about 200 points lower. We'll sort of work around it if we near those levels. So those are numbers up on your screen. Gift Nifty will give you a quick sense of how we are likely to start, and then we will pick it up from there. 35 points higher. F&O positioning, how are we set up? Nigel is standing by with exactly that. Nigel, over to you.
Well, I'll tell you what, the markets have seen a little bit of a correction from the recent peak, but more than a runaway rally, what I would want the markets to do? Just consolidate. Stop falling. That will be the first trigger for it to start moving up. And I say this because the FI short positioning has gone up by more than 50% since the start of the series. So what you require is the markets to stop falling, then these short positions get a little bit nervous. What we have been seeing is the markets have been coming down and the FI shorts have been increasing. Moving to the client positioning, well, they as well have gone ahead and they have added some long positions. So this combination of FI net short and client net long, it's good. But for that, the markets need to stop falling first. The Nifty needs to hold its ground, this 25,500, maybe move in that band, 25,500 on 25,600 or thereabouts. Even in stock futures, there was some short positioning that was created by the FIIs. Well, moving to the options data, there's some encouraging signs coming out there because there were puts that were written. Close to around 2 puts were written for every 1 call. That's on the FI stable itself. And there were options that were fairly active as well. What you've observed in the last few days is even the puts, if you're writing puts, you're seeing that, in fact, the premium has been going down. If you're buying puts, you're not making any money. And that's exactly what happened in Friday's trading session, because the premium on the 25,400 put, it didn't go up, though you got the direction right. On the upside, though, the 25,500 call, well, that's seen a good amount of open interest build up with the premium around 100 rupees. So just looking at the options data, looking at the technical levels, well, the key data points for the day come up for you on the screen. So Friday's low, important. You don't want it to break on the downside, 25,300 odd. And on the upside, the 20 DMA becomes extremely important. The Nifty Bank, well, that's the one that led the fight back in Friday's trading session. I'll tell you what, that one needs to defend this 20 DMA. Intraday, it went ahead and it breached it in Friday's trading session, but there was a good recovery from there on. So the 20 DMA needs to hold out for the Nifty Bank, and on the upside for the Nifty, it needs to get past the 20 DMA. But as I said earlier, shots are getting piled into the system. Market needs to stop falling. That will be enough trigger for the markets to see a bit of a pop. Some bit of consolidation will be par for the course.
Okay, well, absolutely. By the way, if we look at the picture across Asia this morning, it continues to be fairly mixed given the concerns around the US tech sell-off. So the other piece of news is that at the consumer level, inflation is finally positive in China, but at the producer level, it continues to be in negative territory for this is the third year in a row, the latest numbers that have come in this morning. That's the picture. So Hong Kong markets are shrugging it off more or less along expected lines, 0.5% up on Hang Seng. Taiwan's also slightly higher. And if we look at some of the other regional markets, then again, it's a fairly mixed picture as we see across the region. Now, on that note, let's look at what the implied open is telling us. We'll probably have a mild positive start. The question is, can the bulls really build on it? Because that's where bulls have faltered all throughout last week. So we'll talk about this as we go forward. For the time being, let's get to that really bullish call that Goldman Sachs has put out on India equities. Sunil Kaul of GS says that they have upgraded India to overweight, reversing the October 2024 downgrade. He expects the growth revival to be driven by supportive monetary and fiscal policies, RBI rate cuts, and improved liquidity. He also expects the corporate profit growth to rise from 10% in 2025 to 14% in 2026. And this, he says, will be led by financials, defense, consumer, and the tech sector. Goldman Sachs' key themes include mass consumption revival, self-sufficiency, new economy, and high growth pockets. That's a bullish note to start the week. Goldman upgrading India. Well, on that note, let's welcome in Mr. Ed Yardeni, President at Yardeni Research. He's with us for some perspective. Mr. Yardeni, thanks so much for joining in. Good to have you in. Well, let's start first with this whole debate around tech. We've seen a cool-off last week, but do you think it's anything more than that? Is it looking a little worrisome now, the manner in which some of these stocks cooled off and sold off?
Right. No, well, it looks worrisome to some. I think that it's a very healthy pullback. It's hard to get a 1999, 2000 style meltdown in the stock market when there's so many people worrying about that. And so seeing some pullback, some correction in the AI stocks is a very healthy development. We're not going to see this thing feed on itself and turn into an economy-wide recession because it's not going to turn into a stock market-wide bear market.
So then that brings me to the other point, and that's the lack of data. Now there seems to be some sort of effort to get a new agreement going. We'll see how that goes. But some of the data points that we had, for instance, I think there was a consumer sentiment, the Michigan survey. I think that at least was released, and all those points have been fairly negative. So what do you make of things?
Well, a lot of the survey data, even before the government shutdown, was very pessimistic, particularly the Consumer Sentiment Index. To be blunt, I think it's useless. It's been totally useless since the pandemic. It's been showing way too much pessimism, and yet consumers continue to spend. So I would, to a large extent, ignore it. The other concern was the Challenger layoff announcements.
Yes.
Also was of concern. But it was really all technology and it was all warehouses. And obviously, having layoffs is not a good development, but it certainly can explained by a tremendous increase in productivity. And productivity boosts overall economic growth. And a lot of these technology people, I think, will find jobs fairly quickly. Warehousing is a whole different story. We have a lot of robotics and automation there. But neither one of them reflects a weakness in demand for technology or for retail warehousing.
Ed, the win in New York, and I was wondering whether there will be a bit of a turnaround in, trying to cut the size of the budget and that big beautiful bill, etc., healthcare spending being cut. You think all that perhaps will be now on standstill? And maybe even a bit of a reversal, maybe some expansion compared to what people were penciling in?
Well, I don't think we're going to see major changes in Trump administration's policies, but the rhetoric will change. The Republicans, generally speaking, will not want to lose the affordability issue to the Democrats They've seen what that can do in terms of upsetting the politics of New York City. So I think the Republicans are going to embrace at least talking about doing something about affordability. The president's also already been pushing on the drug side, and I think they'll just advertise it more. They'll be talking more about what they've done. They'll be talking more about how energy prices are very low. They may come up with policies that'll bring down food prices. So I think there'll be a widening of the net of policy making, but the basic approach of the administration won't change. I think they've already done everything that they really wanted to do on the tariff side, and I think even if the Supreme Court rules that the tariffs are unconstitutional, Trump will just say, well, that's okay because we did use the tariffs to renegotiate deals. These deals are here to stay, and he'll claim victory in that regard.
Hi, Ed. Morning. Good to see you. And as always, throughout the year, we've been having a bit of a revision in the S&P 500 target. I recall earlier we were talking ballpark 6,000, 6,500. Last time we chatted, you said maybe 7,000 as well is possible. Yeah. What's your call with regard to S&P 500? Where is it headed? Yeah. Because there are some calls that maybe it's peaking out, but I think you have been quite optimistic. And your view on the Indian markets as well. A rank underperformer just in the last 12 months or so. We're hoping that earnings come back and the economy picks up as well. So at current reckoning, your view?
Well, of course, India has had a few years of outstanding performance and having several months where the market is flattened down, again, is a healthy development. You want to give the market a chance to catch up with earnings. Valuation multiples got a bit stretched. And now I agree with the Goldman call. I think the outlook for India is quite good, especially if the whole tariffs thing gets finally resolved and doesn't make headlines. I think there's still a tremendous amount of pressure to move production out of China and into other parts of the world, including India. With regards to the U.S., I usually don't change my forecast very often, but when Trump started talking about tariffs at the beginning of the year, I wrote that I reserve the right to change my opinion as often as the president does. So I try to stay flexible on the issue. But basically, I remained optimistic that we're in a bull market. I still believe that. I'm still using 7,000 by the end of the year. We could have further pullback, perhaps. But, if the government opens up, as we saw on Friday, that could be a positive development for the stock market. So the U.S. stock market, it's a bull market. I think everyone should stay with it.
Absolutely. And I think there's such a thing called seasonality that is also supportive, right? End of the year. 30 days to go for the end of the year, 35 days. Well, thanks very much, Ed. Good to speak with you and really appreciate your time here on CNBC TV18. We'll just quickly run you through what's coming up here in terms of interactions, right? 8:35, we have the management of VA Tech Babak joining us to talk about their second quarter numbers and outlook going forward. Mahesh Patil of Aditya Birla Sun Life Asset Management is a market master of the day. 9:30, we'll hear from the manager of Bajaj Auto performance here in India and, of course, their export markets. Akzo Nobel will be speaking with us at 9:40 on the quarter gone by. Paints and Focus, we have the management of Niva Bupa joining us at 9:50 on, of course, the monthly numbers. A bunch of other issues to talk to Niva as well. And, of course, towards the end of the program, we have Latha in conversation with Sonal Desai of Franklin Templeton Fixed Income on US Yields, dollar and the rupee. Coming up.
Time to slip in a quick break. We've got a lot of stock-specific action to track for you. Get at that in just a bit. For the time being, I give you a sneak peek into the top 10 segment. We're looking at Bajaj Auto, Torrent Pharma, Nykaa, Global Health, Kalyan Jewellers, Nalco, GSW Cement, as well as some auto stocks. On the flip side, Trent and Transformers and Rectifiers will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Well, while the indication from the implied open from the GIFT Nifty is that we'll probably start on the positive side. We need to see if the bulls can retain their winning streak. Last time we saw the implied open was about 20 odd points higher, 43 points higher. So looking pretty okay for this Monday morning. What about individual stocks? Lots and lots of earnings came in through the weekend as the season comes in its last lap. So let's straight away take it to our team for the top 10 stocks to watch out for this morning. Guys, good morning to all of you. Let's start first with Sudarshan. Sudarshan, Bajaj Auto revved up.
Good morning, Surabhi. So amongst all the auto stocks, Bajaj Auto is the only stock which is still down YTD. But as far as Q2 FY26 earnings are concerned, overall earnings have looked largely in line or slightly better than estimates. So I'll talk about two numbers. First, revenue. So it was led by two things. First, export continues to see a healthy growth. In the month of October, total volume was 2 lakh units after 40 months. And three-wheeler segment continues to see a healthy growth. Even going forward, companies saying that it will see growth in the range of 15 to 20%. These two things have helped company report revenue growth of 15%. What has helped margin? First, operating leverage. Second, rich product mix. And third is rupee depreciation. So dollar realization has improved to more than 87 versus 83 in the same quarter last year. That has helped company report margin of 20.5%. That's at multi-quarter highs. Going forward, company is saying that in the medium term, two-wheeler motorcycle segment growth is likely to be in the range of 6 to 8%. But remember, H1 FY26 for Bajaj Auto domestic motorcycle had seen a decline. Also, growth is likely to remain strong for both export and commercial vehicle segment. So I'm going with green for Bajaj Auto.
Okay, all right. Thanks a lot for that, sir. In fact, we'll have the management. Mr. Rakesh Sharma will be joining in at 9:30 a.m. later today to discuss the past quarter's numbers and how he sees trends shaping up moving ahead. That said, let's hop across to Mangalam. Trent, a darling of a stock a few quarters ago, and now growth is not enough, I think so, Mangalam. Tell us, how do you read the numbers?
Well, it looks like the company is entering the moderate growth phase after the exponential growth that we've seen already, and I perhaps suspect the street to adjust to that reality as well as we move forward. So soft revenue growth, the company had reported in their second quarter. Reported EBITDA is up 26.5%. But remember, if you account for all the accounting changes in lease agreements, etc., the company said the operating EBITDA actually is up 14%. So on a 16% revenue growth, the operating EBITDA up 14% implies that on a like-to-like basis, there has been some margin moderation as well. The net profit lower due to higher depreciation. The consumer sentiment in the second quarter was relatively muted. So overall, the revenue saw an uptick of 16% and the net profit saw an uptick of 11.5%. They added 19 stores, West Side stores, and closed 6. And they added 44 Zudio stores and closed 4, which includes 1 store in UAE as well. The stock has been a bit of an underperformer, soft performer in the last 12 months or so. And I expect that weakness to continue on the back of these numbers.
Okay, all right. Thanks very much, Mangalam. So maybe a bit of a continued readjustment here as far as Trent is concerned. Torrent Pharma is the next one we want to focus on. Ekta's here. Ekta's got details. Ekta, good morning.
Morning. Well, good numbers coming in for Torrent. The revenue was up around 14% Margins came in at close to 33% this quarter, and a profit growth of around 30% at 591 crores. India did well. It was up in double digits, so up around 12% for the India business. US did well as well, so up around 21%. It was a recovery after multiple quarters, according to analysts, and they do expect that to sustain. And Brazil was up around 21% as well. So good going for Torrent. Expect the stock to be in the green on the back of the numbers.
Okay, all right. Ekta, thanks a lot for that. Going back to Mangalam. Mangalam, tell us about Nykaa.
Well, Nykaa is in the same phase as Trent was, say, a couple of quarters ago. You know, a big hyper-growth trajectory because net revenue growth in mid-20s for the last 12 quarters. Gross margin is at a 12-quarter high, the highest EBITDA margin in PAT since the company is listed. And at the same time, the gross merchandise value up 30%. This growth is the highest that we've seen in the last 6 quarters itself. So 25% revenue growth. The EBITDA grew by 53%. And on a low base, the net profit actually jumped by over 150%. See a fair amount of green on Nykaa. 25% growth in their beauty business, which has actually seen the margin expansion. Fashion as well. Losses have, narrowed down from about 32 crores of EBIT loss to about 21 crores. The company has guided for it becoming profitable by the end of this year, and we are getting into the better season for this fashion business. And additionally, they've also announced, their own brand, which is House of Nykaa, saw a GMV jump of 74% year on year. So good times continue for Nykaa.
Looking beautiful, looking good. All right, that's Nykaa. Thanks for that, Mangalam. Let's get back to Ekta. Ekta, what about global health? How was the quarter?
Global Health or Medanta, good numbers. Revenue up around 15%. Margins were a bit under pressure, 21%. And the profit came in at around 158 odd crores, so no complaints coming in. 7.7% increase in the occupied bed days. Occupancy as a whole was at 64%. Average revenue per occupied bed was up around 5.5% to 65,570 odd rupees, and international patients was up around 48.5% on a year-on-year basis. So the internal statistics look good for Medanta as well. Overall did well for the company this quarter.
Okay, all right, Ikra, thanks very much. That's Medanta on your screens. Kalyan Jewellers is the other one. Mangalam is back with that one. Mangalam, morning.
Strong performance for Kalyan Jewellers. We've seen it in the jewelry space so far, and Kalyan's update as well was fairly strong. 30% revenue growth, 50% EBITDA growth, margins expanded by about 100 basis points, and the net profit nearly doubled from 130 crores to 260 crores. The good part, non-South contributed 54% to their revenues. Same-store sales growth was also mid-teens for both South and non-South. And studded share improved from 30% to 31%, and that explains why the margins were higher as well, despite higher contribution coming in from franchise stores. And they target same-store sales growth of mid to high single digit and continue to increase the share of non-South. And they have also announced that they will start a new hyper-local design brand. The first brand will be launched in FY26. So all of that should augur well for their hyper-local markets and expanding in specific areas of the country.
All right, Mangalam, thanks a lot for that. Well, I'm focusing on two stocks, Nalco as well as JSW Cement. Let's start off with Nalco. Revenue growth of close to around 7.5%. Good growth is what we saw out there. But the operating profit was up by 25%, which told you the margins were much better, both on a sequential basis as well as on a year-on-year basis, coming in at around 45%. On alumina, there were higher sales, so that's operating leverage that played out there. On LME, aluminum, we know that prices are much higher, so that's what supported as well. And in addition to that, you know, both the segments, whether it's chemicals, which is the alumina business, that did very, very well. Just look at it. The EBIT number, much higher in this quarter in comparison to the previous quarters, even on the aluminum business, big beat out there. Besides the higher top line that we saw, we had employee cost that was lower, cost of power consumed as well was lower, and both those two played out into better margins. The PAT number came in much higher. That's because of a better operational performance, and the effective tax rate as well was a little bit lower. In addition to this, the management has gone ahead and announced a dividend of around 4 rupees, so the street will like that. And they've also said that their alumina refinery expansion, 1 million ton odd, is on schedule to come in June 2026. So that's going to be important. Hopefully they meet the deadline and they don't delay that, because that's normally the trend that we've seen with some of these PSUs. Moving to JSW Cement, numbers look good. Top line, we have a growth of close to around 17%, so good going out there. The EBITDA number, I've adjusted the base year number, because there was this fair value loss. They had those convertible instruments before listing. And because of that, in the base year, there was around 37 crores of a hit. So, I've added that back in. But still, the adjusted EBITDA looks very, very good. Even margins look very, very good. The EBITDA per ton comes in at around 860 rupees per ton. What played out for them? The sales volumes is up in mid-teens, which is very good. Remember, the industry grew at just around 5%. So they outgrew the industry. However, realizations actually were softer than what the industry did deliver. The reason that the margins came in much better is because the gross margins have expanded, given that now they have sourced a higher amount of their slag captively rather than buying it from third parties. The net profit came in much higher because finance cost as well has gone in lower, and the net debt number post the IPO proceeds have come down drastically. Just take a look at that. Just one word of caution, 3% of equity that was locked in, that gets freed up for trade. Hormuz, my colleague, had just told me about that. So that could be a reason that the stock could be under pressure, but otherwise the numbers look quite good. All right, let's hop across to Vinny. She's here to tell us about transformers and rectifiers. Vinny?
Hi, good morning. So in terms of transformer and rectifiers, weak set of numbers that's coming from the company this time. Revenue growth, decline of 0.2% for 60 crores over there. Profits are down by 25%, a bit down by 25% as well. And overall, margins have seen a sharp contraction. 11.2% is what the EBITDA margin came in at versus 14.9%. Order book has also on a sequential basis just a mild increase there. 5,472 crores, and last year the order book was at around 3,500 crores. In terms of order inflow, That has come in at 590 crores. Last year, the same time, it was 1,031 crores. That was the order inflow as well. So it's a bit of a muted performance in terms of order inflow is what the company has received. Overall, weak performance execution seems like it's still a concern for the company and an important challenge. We'll watch out for margins because they are below the guided range of 17 to 18%. So in the con call that's going to be held today, will they reduce their margin guidance? That's something that we'll watch out for. And obviously, this is the lowest level in terms of margin since Q3 FY24. Staff costs has seen an increase in this quarter, as well as other operating expenses that's seen an increase as well. So we're expecting red here.
Okay, Vinny, got it. So some red maybe on transformers and rectifiers. We'll keep that in mind. Back to Sudarshan. Now, there's some good news finally that's coming in. So it seems that those rare earths will finally make their way to India and pretty much rest of the world.
So another reason for auto companies and auto ancillary companies to react positively today, as in the month of October 2025, if you remember, Chinese government had announced export controls, and that would have come into effect starting December in the phases. Now, following the recent meeting that US President had with Chinese President in South Korea, reports suggest that Chinese government has decided to suspend those export control orders, and mainly those are for rare earth metals, which are being used very actively in high-end bikes, cars, and all the EVs. Now, Chinese government has decided to suspend that for at least 1 year till November 10 of 2026. So that will be taken very positively in the hope of improved supply chain.
Okay, all right. So some additional good news coming in for the auto space today. Thanks for that, Sud. Well, with that, let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow are Bajaj Auto, Torrent Pharma, Nykaa, Global Health, Kalyan Jewellers, Nalco, JSW Cement, and auto stocks, while stocks with negative news flow would be Trent and Transformers and Rectifiers. Okay, so that's our stock list for the morning. Let's now also figure out what's the latest in the world of commodities. Manisha is joining in with all the action. Manisha, good morning.
Morning, and thank you for that, Surbi. I'll start with the precious metals because we're looking at some gains coming back in for this one. Important psychological levels is what we are breaking on the higher side. So gold is back above $4,000 an ounce, and silver prices gained 1% on Friday. Well, the weak U.S. data is strengthening demand for safe haven yet again, and then the markets do believe that the AI valuations are overstretched. We've also seen some corrections happening in equities globally, and that has been supportive. Apart from that, the U.S. consumer sentiment, the jobs data, both of them were weaker than expected, and that brings the street putting in probability of 72% for a U.S. Fed December rate cut. So that has been supportive as well. Also supportive is the fact that the Chinese central bank increased their gold reserves for a 12th straight month for the month of October. But it's not just about gold or silver or copper. We've seen the crude oil prices gain also. Last week's 2% of decline has turned into gains in this week right now. Couple of things here. One, China crude imports for the month of October were quite positive month on month, year on year. And the second is there are conversations that Hungary perhaps could continue. So clearly,
Oh, I think we've just lost that line with Manisha. We'll get her back in a bit. Let's do one thing. We'll take a very quick break on that note. Come back on the other side. We'll have Dharmesh Kant, Head of Research at Chola Securities, joining in to go through some of these interesting numbers that came in over the weekend, plus more fundamental stock ideas.
Welcome back. 20 minutes to go for the pre-open session. As promised, we're going to get you lots of opinion from the Global Leadership Summit, which was held here in Mumbai on Friday. So hearing from the Jio Financial Services Chairman, KV Kamath, who said that clean balance sheets bring a sense of confidence, added that India should aspire for a growth rate of 10%. Listen in.
And what does consolidation get you? It gets you scale and gets you bulk. And gets you, I would say, efficiency of operation. And all these are critically important today, and even more so when you're talking of, I would say, a technological revolution that you're all going through. So this is absolutely the correct move at this point in time. My biggest confidence is the fact that, what gives me the biggest confidence is the fact that the bank balance sheet is clean. If we were having this conversation in a situation where bank balance sheets are not clean, profitability is not at healthy levels, then we would have probably gone in a different direction. So banks are strong, and banks can today compete. I would say that we should actually aspire for a 10% growth rate, and then we will achieve 8%. So that's what we need to do. And also, and I'm very happy that the index is being reset of, say, industrial production or various indices, because we will then have a better picture of at what pace are we really growing. I would think that we're probably growing a little faster than what we all assume.
All right, that's Mr. Kamath on the way forward for the Indian financial landscape. Let's also tell you what the other big voices were. We, of course, had the Chief Minister of Maharashtra, Mr. Devendra Fadnavis, at the event, and he said that the state will be leading the infrastructure scenario in India over the next 5 years. Take a look.
अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है, क्योंकि मुंबई और एमएमआर रीजन ये एक ऐसा रीजन है कि जो भारत की अर्थव्यवस्था को एक पावर हाउस के रूप में, एक ग्रोथ इंजन के रूप में ये डेवलप कर रहा है। और जो हमारे प्रधानमंत्री मोदी जी का सपना है इंफ्रास्ट्रक्चर लेड ग्रोथ का, उसके साथ साथ जो एक प्रकार से अर्थव्यवस्था को विस्तारित करने का जो उनका सपना है उसको पूरा करने का काम हम लोग कर रहे हैं। तो अभी हम लोगों का एक प्लान चल रहा है कि हम बांद्रा से सीधा एक टनल ये बीकेसी में लाएंगे और बीकेसी से सीधा उस टनल को हम एयरपोर्ट ले जाएंगे, तो जिसमें आपको उसके बाद ये जो बीकेसी का जो कंजेशन है और वेस्टर्न एक्सप्रेसवे का जो कंजेशन है वो ख़त्म हो जाएगा। अभी हमारा जो बांद्रा वर्सोवा सेक्शन है उसका काम चल रहा है। बांद्रा वर्सोवा के कारण वापस हम लोग वेस्टर्न एक्सप्रेसवे जो मुंबई का 60% ट्रैफिक कैरी करता है उसको डीकंजेस्ट करेंगे। वर्सोवा से लेकर हम लोग दहीसर और दहीसर से लेकर भाईंदर, इसका काम हमने ऑलरेडी चालू कर दिया है, जिसमें कुछ टनल्स है, कुछ ब्रिजेस है, वो हमारा हो जाएगा।
Well, that is the Chief Minister of Maharashtra, Devendra Fadnavis. I mean, interesting conversation about the infrastructure build-out that we're seeing here in Mumbai and what plans are. And, I urge you to go online, listen to the full interview on YouTube, and gives you a sense of confidence that a lot of work is going on, a lot of work is being planned for the state and, of course, for the city of Bombay as well. Dharmesh Kant is with us, Head of Research at Chola Securities. Dharmesh, great to have you with us here. Thank you very much for joining us. Before I ask you about earnings and what came out, I want to just talk about the capital market stocks, which all surged on Friday. We had the SEBI chairman there at the conference, and he kind of basically said, of course, before that there was a finance minister, I think, at the SBI conclave, and then there was the SEBI chairman at the Global Leadership Summit at the CNBC event, where the SEBI chairman essentially said that, we are... He didn't sound too harsh on options, especially weekly options. He said, well, there's a consultation paper, etc. It's going to be there'll be deliberations, but nothing harsh. At least that's the sense came out. I was looking at the stock back then when those comments were being made. Stock was up 1%. BSE ended up 9%. Angel was up 5-6%, and a bunch of others like CDSL, CAMS, etc. Your thoughts, Dharmesh, on this space?
Yeah, good morning, Prashant. Thanks for having me for the show. I mean, yes, they have gone milder, and I think a mid-path is being talked about, and both the finance minister and the SEBI chief were sounding the same notes. There was no, differentiation between the two. And rightly said, investor education, awareness, and the risk which is being involved in taking options trade, if the investors and traders fully understand them and are appreciative of them, definitely the losses will come down. However, the fight against the algo remains. To my mind, SEBI chief was more of a, calibrated kind of to say, and because of that, we did see a knee-jerk kind of a reaction taking place. So eventually the volumes will, fill the gap, which this temporary, even if the disruption comes through, will take effect. So to our mind, we are still not advocating, executors like intermediaries kind of a play on the like brokers and all. But definitely we are very bullish on the exchanges and the infra plays like CDSL, NSDL, CAMS, KFIN. So but this is the indirect route of playing the market, and not to forget the AMC. So these basket is still intact. Any declines can be bought into. Direct plays like angel booking, Motilal and all should be avoided for the time being, because to my mind, eventually this will come down, though at a slower pace.
Okay. Dharmesh, hi, good morning. Lenskart, it's finally the day, right? And I was looking at the so-called grey market premium. I think this indication is that I think it's now down to some 3-4 rupees, not too much. So the question is, A, for people who did get allotment, who applied, who got allotment, what should they do? If there's no listing pop, do you just hold on? Is there long-term potential in this business? And B, if the stock declines today because of so much of debate around the valuations, would it be a buy on dips? And if yes, at what kind of price? I mean, it finally got offered at 402. So when does Lenskart become a buy?
Good morning, Sobe. Good luck to Mr. Dinsal and the Lenskart team for the IPO listing. We have a clear, advice on same. We have a avoid rating on Lenskart. And see, going by Mr. Bansal himself, he said 25% of the addressable market is already being catered to, and they are the largest player as far as the eyewear is concerned in India. And still you are sitting on basically no profit. Whatever profit was there, that was led by other income and not from the business's operation per se. So to my mind, after capturing so much and you're being the largest player in the organized segment, still you are struggling to get a good profit. So best to the judgment of the people who want to buy it. I will like to see at least 1 year, 1.5 years before the profits are on the table. And any peg ratio above, 40-50 is not advisable. So the best they can grow is say 15-20%, which we have seen. FY24, they were growing at 43% top line. FY25, they came down to 23%. And definitely for FY26, I think it will be below 20% kind of a growth rate. With that kind of a growth rate, you can do your maths when the valuations can be justified in what P multiple. And we have plenty of examples to subscribe for that. Nykaa is the case in point. DMart was there. Today you have Trent playing out, and similar valuations will play out for Lenskart as well. So
yeah, out of the names you mentioned, Trent was the deja vu, right? A company that had a fabulous run growing at 50%. But as the growth came down, so did the valuations. Take that point. Okay. More on Lenskart in a bit. Dharmesh, stay on. We'll just quickly go through a management conversation as well. Viatech Vabag is the company on our radar. Now, Viatech reported fairly quiet sort of a second quarter. We have Mr. Skanda Prasad Sitaraman, Chief Financial Officer at Viatech Vabag, joining in. Thanks very much for joining in, Mr. Sitaraman. So the reason I said quiet was I think everyone's focusing on your margin. The revenue growth was fine at 19%, but there is margin compression and EBITDA was also lower. So can you just explain at the operational level what happened? Because our colleague is telling us that even if you look at margins X of this other income falling, even then there is a compression. So just tell us what exactly went into it.
Yeah, hi. Good morning. Good morning to all your viewers. Thank you for having us on your show. We see it differently. At least we don't see it as a quiet quarter. This quarter continued to be a profitably growing quarter for us. Excluding other income is something we have explained enough in the past, and I will re-explain it if required. We are a global company. More than 50% of our business comes from outside India. And obviously, then the foreign exchange gains and losses become part of operational income. So for us, that is operational income. And hence, we have grown year over year. Coming to the margin percentages, we have also guided a 13 to 15% band within which we continue to perform. And we have explained in the past, see, this is a business where it's a game of mix. There EP and EPC projects. EP projects are lower on top line, but higher on margin percentages. EPC give you volumes. But obviously, since construction is a pass-through for us, we end up having lower margins. So with growth, this band of 30 to 15% is what we have guided. And that is what we are at. From our point of view, That way, we have delivered on a 13 to 15% band. We have delivered on a profitable growth.
So, if allow me to come in, good morning. Margins are 10.7%, right, for the quarter?
No, the margins are 13.8% for the half year, if you see.
Okay, this is including other income.
Yeah, this is including Forex.
Including Forex.
We are not including all parts of other income. We take Forex because all our Forex is from operational.
So Forex for you is just translation gains or losses when you bring that money back?
This would be both. There will be translation as well as realized gains. Because a large part of our business is export. So when we export, obviously, the difference between what we bill at and what we collect at will deliver gains.
So you're saying, including Forex, it's 13.8%. And the guidance of staying between 13 and 8 includes, I mean, has always included Forex, which you consider as part of the operational income.
Correct. 50% of our business is international. So if you see the last quarter, we had a Forex loss. This quarter, we have a Forex gain. So we do not distinguish when it is a different result. For us, Forex is operational, and that is part of EBITDA.
Okay, so that clarifies the Forex piece and why you consider that as part of the operational flows, revenue flows. Let's, however, talk about that mix which you said. And going forward, what makes you confident that you'll be in this band of 13 to 15% margin? How is the mix changing? If you talk about the order book right now and the bid pipeline going forward, some more color on that and how that will play out on the margin.
Yeah. So today, our top 5 projects, if you take, are largely EPC projects. Last year, we did have the likes of Senegal, the Russian project, which had an EP mix. But towards the end of last year and from the start of this year, there has been a higher mix of EPC projects, which means there is growth in volumes, which is what we have guided. A large part of these projects are backed by good payment security, so quality order book. And also, as we look forward, we see these projects will churn out the revenues, and also the new projects that we are bidding for, mainly in the Middle East and African region, are large marquee EPC, few EP projects. And that is where we have given a preferred bidder guidance of about 3,000 crores of orders, where we are well placed and we would secure within this year. So for us, the mix is more towards EPC now. These are quality orders with good payment securities. You've already seen us demonstrate in the first half of the year, which is a little less heavier than the second half, where the volumes are much better. And if we are delivering 13.8 in the first half, we are confident about the second half, and the full year is going to be good and well within the band of margins.
Sure. Just a quick last point. Your order book right now is about 16,000 crores. Where do you see it by the end of the year?
We would certainly like to have a year-over-year growth of 15-20% in order book as well. But we have guided that we will be about 3x of our revenues, and that we are even today, and we will continue to maintain that.
Okay. All right. We will leave it on that note. Thank you very much for joining in, and good luck for the second half. Well, that is the performance at VA Tech, Vabag, at the end of Q2. We'll take a break on that note. On the other side, we have our technical experts joining in, Sudarshan Sukhani, as well as Siddharth Rai, with some trading ideas for today.
Welcome back. Well, let's hop across to Hormuz. As always, he's here to tell us about all the big movers and the ones that had good amount of delivery as well. Hormuz.
Good morning, Nigel. And the capital market names were the ones that were the buzzword on Friday, and BSE was leading that charge. There's an almost 10% gain that the stock saw on Friday, which was the biggest in at least the last 6 months. And even on the volumes front, it was also the highest since May of this year. Now, over 2 crore shares were traded for BSE in Friday's trading session, which is almost almost 4x of the 20-day average of 48 lakh shares. And out of those 2 crore shares, 65 lakh shares were marked for delivery. That too is a 4x jump from the 20-day average of around about 15 lakh shares. Now, L&T Finance was the other one. It was reacting to its earnings call updates, of bullish commentary coming in there from the management. That stock was also up 10% on Friday. And the volumes were the highest since June of 2024. So in almost 17 odd months, the volumes were the highest. 7 crore shares were traded of L&T Finance. It's a 10x from the 20-day average of around 70 lakh shares. And even out of those, almost 2.5 crore shares were marked for delivery. The 20-day average here is just over 30 lakh shares. And the last one is Precall. It was an earnings reaction on Friday. The stock was up 9% in Friday's trade. Volumes were the highest since February of 2023 on the day when the deal announcement was made. And here too, almost 1.5 crore shares were traded. The 20-day average is only 1.5 lakh. And even here, almost 15 lakh shares were marked for delivery. The 20-day average is just 80,000 shares for Precall.
All right, Narmas, thanks very much for that. As always, an interesting set. We discussed BSE earlier. We'll discuss some of the others as well in a bit from now. We take a quick commercial break here. We'll come back, get you some top market voices from the CNBC-TV18's Global Leadership Summit and tech calls as well on the other side. Stay tuned.
Welcome back. Well, as promised, let's get in our technical experts. We have Sudarshan Sukhani of Technical Trends and Siddharth Rai Mangala of Stock Box Technologies, who joins us on the show. Hi, Sid. Hi, Sudarshan. Good morning. Good to see you all in. Sudarshan, you go first. The markets have been a little bit slippery. The good news was that on Friday, at least we recovered from the intraday lows. How would you trade the index? We like to start off with some green as per what the GIFT Nifty was suggesting.
Yeah, good morning. Well, the markets keep on correcting, and that was a very decent correction. So after that big gap up, a trading range, another renewed up move, the market decided to have a smooth and decent correction. See, corrections are welcome because they take the froth away from the market. So this is a very good day to begin trading today. I would say that the Nifty is a buying opportunity for the day, and hopefully for the next few days, keep a stop under 25,400 and look to buy the Nifty. Maybe you can say distribute your trades, something at the open, something at a dip, some on a consolidation. But I would be a buyer in the Nifty today with the stops I mentioned.
Okay, got that. Siddharth, what about you? I recall you being a little bit cautious on the index, and that call actually worked out quite well. Time to turn that around, or do you think we have further downside?
And thank you for having me, first of all. See, Nigel, Friday's short covering move was kind of a lot on the expected lines. I did discuss it with Surabhi in pre-market on Friday that after all that quick fall from the 26,100 around levels, the Nifty was looking oversold on Friday, and 25,300, 25,400, 25,350, 25,400, that range acted as a very strong support for the index. Now, Nigel, see, a full-blown recovery or a chance to buy for further up move will only be coming once Nifty manages to go above and sustain for some time above 25,500, because that's the most important level right now. So we did not see a closing above 25,500, a good closing above 25,500 on Friday. Now it stays the same. We have to watch out for this level in the first 1.5 hours, because that is what is going to be setting the undertone for this market for the upcoming for this whole week. So 25,500 is going to be very crucial. If we go back above 25,500 and sustain for some time, we will be seeing an up move towards 25,700-ish levels. But 25,500 is going to be that level which we have to watch out for.
Gentlemen, morning. Good to have both of you here. What about specific calls, Siddharth? What would you trade?
Yes, sure. Hi, Prashant. See, two stocks, both of these we have to buy. The first one on my radar is UPL. See, the reaction to its quarterly results has been very good, Prashant. In fact, we are seeing a breakout above probably 3-year-old levels. So the breakout is very big. We can stay in it for the long term too. UPL can be bought. For now, the important levels in the stock will be right now the spot is around 750. Stop loss will be at 729. and our targets being the first target 795, the second target 810. The second stock is Jindal Steel. See, there was a very interesting move in this counter in Friday's session. Initially, the stock was negative, but it did turn around very strongly from the 1000 levels. We saw it coming back to around 1070. So it can be bought here. Right now, the spot is around 1070. The stop loss will be at 1055, and our targets being first target 1099 and the second target 1115. Jindal Steel.
Okay, all right, got that, Siddharth. Thank you for it. Let's go to Sudarshan as well. Sudarshan, morning. What about your stock ideas for the day?
Yeah, good morning. See, M&M is a buying opportunity with a stop under 36.15. Paytm is a buy after a long time, stop under 13.20. HDFC Life is a buy, the stop under 7.35. So I have three buys, one intraday short, that is Glenmark. Keep a stop above 18.55. But as I have said, that I'm a little beat on the market, so focus on the long.
Okay. All right. Got that. Thanks very much, gentlemen. We'll come back to you a little closer to market opening. We have Dharmesh, who's been waiting by patiently. Dharmesh, thank you for staying on. So just wanted to, toss these weekend earnings to you, if anything really stood out. You briefly mentioned Trent and Nykaa. Very different stories there. Trent continues to show a bit of a deceleration in growth. But Nykaa seemed actually better. Do you like any of them? And aside of this as well, any of the other key weekend numbers that caught your attention?
Yeah, I mean, Nykaa, the numbers definitely looked encouraging, but again, the valuations comes into play, and it's a long runway left before the valuation can, justify the numbers. I mean, numbers can justify the valuation. So we are giving it a skip. But, Bazaar Auto number looks interesting that the export market has been doing fairly well, and if the domestic market picks up, then definitely a catch up on the price action compared to the relative peers may fall into place. Nalco is one number which we liked, greatly. Just because all the parameters, all the boxes were ticked marked, and valuation-wise is quite comfortably cheap. Going forward, as we see, global tensions easing down, and more or less now, I think the reversal of tariffs may start seeing into place. So if that happens, then definitely aluminum prices will be a kicker going forward. So Nalco is the space which we like. And in pharma, I mean, there are particular counters which posted a good set of numbers, like Lupin numbers were excellent. Jadis Life Sciences came out with a strong set of numbers. Torrent Pharma came out with a strong numbers. So these are the plays where I think still the 2 months may still be muted on the index front, but these counters may do fairly well, and a lot of upside left there just on the valuation count. So be stock specific, and there are many pockets where the numbers have been good and encouraging to ride the trend going forward into the month of November and December.
Absolutely. Dharmesh, thanks very much. Good speaking with you, and talk to you again soon. Well, just back to some of the opinion that we got from the Global Leadership Summit, and this is purely markets now. So S. Narain, one of the largest money managers in the country, Rhythm Desai, top equity strategist, Neelkant, who looks at things from a macro-ish, top-down perspective. I sat down with them, asking them what next for equities in 2026. Listen in.
The risk is something going wrong in US AI stocks, because if US is 60% of the global index, how do you expect India to go up when US is going down? So I think the challenge is US market. At any point of time, markets can correct, and I think, we look at a global guru like Warren Buffett. He has created the highest row of cash at this point of time ever. And, he's the only person who doesn't care what happens in the near term. He doesn't have any performance risk. He doesn't have any risk that anything can go wrong just because he's underperforming. So I think what he's doing suggests that there is enough risk of US markets correcting. We think it's a mature bull market. So, there have been such good stock pickers in India that anything which has to be discovered got discovered. But a lot of people get frustrated. That is like the efficient market theory. A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years, they don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PSU, buy metal, buy telecom. all those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, you'll find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors, and we find like recently we bought oil and gas, and we found that it suddenly performed. Now today, if you ask me, is oil and gas the best sector? I would say I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead.
India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive.
Roll forward gains in earnings are now starting. So for almost 3 quarters, we had all the roll forward gains, which is 3 to 3.5% a quarter, being offset by earnings cuts. So now I think that GDP upgrades have started. I expect that by the end of this fiscal year, the real GDP number will be upwards of 7. The reason why there is still a lot of negative sentiment is that nominal GDP growth has been coming down. And again, people have been extrapolating too far. So from 18% in FY22 to 8% this year, people think that this is the new trend line. I don't think so. We have been tightening fiscally and monetarily too much. Therefore, core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse. And so we are going to be back to 11-12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down. And they've started to slow down. I think maybe some earnings upgrades can happen. And the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India. In fact, foreign investors have been using, hedge funds have been using India as a funding shot.
Okay, well, at the margin, Neelkant and Rhythm, of course, sounding more optimistic, relatively speaking, but Naren, of course, echoing the view that, his big risk comes from what's happening out there in the US, not so much locally speaking. Well, I think it's time to get some more trading ideas. Sudarshan is back with us. Sudarshan, 9-10 calls. What do you have?
Well, it's M&M. Buy M&M with a stop under 36.15.
Okay, Mahindra & Mahindra is Sudarshan's call. Well, let's just revisit and put the spotlight back on Trent and Nykaa on the back of numbers. Mangalam is back with us. Mangalam, morning.
Good morning. So Trent is actually basically readjusting to a new normal where the hyper growth period is perhaps behind the company. That's what brokerages believe. If you look at the numbers, is nearly 16% revenue growth. The reported EBITDA is a lot higher, but if you look at the company's own adjustment or calculation of that EBITDA, it's up around 14%, which implies that there has been some narrowing of margins, and the net profit is higher due to lower depreciation. So it's a growth of around 11%. But remember, over the past few years, Trent has seen a much higher growth than that. They continue to expand their store footprint when it comes to West Side as well as Zudio. But going forward, the street believes that maybe normalized growth for the company would be around 20% as against previous few years where the growth has been over 35%. And that's what the stock will adjust to going forward as well. If you look at Nykaa, good performance continues. They are in their hyper growth phase. In fact, it's been the 12th quarter where revenues have grown in mid-20s. We have gross margins which are at a 12-quarter high. EBITDA and net profit have been the highest since its IPO. And at the same time, the gross merchandise value grew at 30%, which is the highest growth that we've seen in the last 6 quarters as well. Overall revenue growth of 25%, EBITDA growth of 53%, net profit growth of over 150%, 13 crore turning into 33 crores, led by beauty, reducing losses in fashion, and their own brands, which have seen a GMV growth of over 74%. Additionally, the company has also announced Deepika Padukone as their brand ambassador. And is one of the last, A-list stars which haven't been on Nykaa's list and now has entered as well, because you already have House of K Beauty and the other Bollywood stars.
And Nykaa indeed is holding up about 3% in the pre-open session. Thank you for that, Mangalam. In terms of result reactions, the other one to watch out for would be Nalco, which is about 3% higher. Nigel was telling us numbers were good. It was also Dharmesh Khan's top pick from the whole earnings pack, numbers that came out of the weekend. So Nalco is also looking good. Just a quick check on Bajaj Auto before we get started. Even Bajaj Auto up about 1%. Steady numbers, margins at 20.5%. And well-rounded growth, and the market's taking note of that. And given the fact that the stock hasn't performed, Bajaj Auto is actually down. For the last 12 months, it's down 11%. This year, it's been absolutely flat, underperforming the rest of the auto pack. So let's see if that changes or not. But yeah, just a couple of seconds to go now.
Okay, I think just taking a look at what the index looks like, and we'll get down to individual stocks, which is going to be more interesting. So it's flat, 25,530. It's about, 50 points, 60 points higher. And the Nifty Bank is up about 0.1, so not very much in the Nifty Bank here at this point in time. Mid-cap index is starting higher by about 0.25%. The small-cap index will come up, and I think there as well, there is some amount of gains which are coming through. Yeah, about 0.25%. So I think uniform third percent gains across the 4 indices. Nifty heat map will give you a quick sense of how we are starting as far as the broader indices are concerned. The Nifty 50 is concerned, so it's all in the green. I think there is Infosys, Bajaj on one end. Trent, as Mangalam has been highlighting, a little bit more in terms of readjustment to lower growth rates afoot there. So otherwise, I mean, it's pretty good looking screen. And Reliance once again is amongst the top gainers. Reliance is up about 0.75%. But let's get down to more names and individual reactions. Surbhi.
Okay, so on the large cap screen, taking things higher is Infosys, the winner of the morning. There's Hindalco, which is about 1% up. Bajaj Auto, like we just mentioned, is seeing a decent reaction to its numbers, 1% higher there as well. Asian Paints, L&T, Reliance is chipping in a little bit here and there. Eternal is managing a 0.5% gain for itself as well. And then it starts fizzling out. But otherwise, most stocks are contributing 0.5% to about 0.75%. SBI, ITC, Titan, all these stocks are up and about. On the flip side, Trent is showing a lot of disappointment. The growth numbers have been coming down. The company, remember, I think it was 2 quarters back, it guided a steady state of 25% growth, but it's not able to meet those numbers as well in terms of growth expectations. 4%, so straight away gone from Trent. Power Grid, Apollo Hospitals, Eicher Motors. These are some of the other stocks that are cooling off. So all things put together, the Nifty, for what it's worth, is still managing about a 60-point up move. So steady start. Nigel.
Well, the accent of the morning is transformers and rectifiers. The stock is down 20%, weak performance in Q2 because of executional challenges. The margins are at its lowest levels since Q3. Margins are down because of higher staff costs as well as higher OPEX. And, the street clearly is very, very disappointed with these set of numbers. Smacked 20% down on that one. Remember, these are one of these names that have seen a big run. And now, in fact, is coming for some intense profit taking. The other few stocks I'm looking at, Pennar Industries, well, that stock is down close to around 13%, so big selling on that one. HPL Engineering, well, that came out with a set of numbers. The street likes it. Stock is up 10%. Big up move is what we're seeing on that particular name. Nalco, I told you, the numbers were quite good. That stock is open up with a gain of around 5.5%. There are some reports that are indicating that Vedanta may not get Jaiprakash Associates assets after all. And Adani Group could get it. It's not confirmed, but if this is the way things, go about, then actually Vedanta shareholders will consider themselves as the lucky loser. They don't want Vedanta to go ahead and take another asset on board. So let's see how that goes. But for the time being, Vedanta up 1.5%. JSW Cement as well is up close to 2%. It's still more than 10% away from its IPO price. And keep in mind that we could possibly have supply that is opened up now because there was, 3% of the equity that was in lock-in. Today, that gets free for trading. Otherwise, plenty of stocks in the broader markets. Newland up 10%. Super move out there in reaction to its numbers. That stock is flying away. And Interact as well, another management that will be joining in during the course of the day. That's up 6% as well.
Okay, so looking pretty okay for the time being. Newland, HPL Engineering, Nalco, good result reactions. Just watch out for Amber. Amber fell quite a bit on Friday after a disappointing second quarter. And it's down another 3% today. So 7% on Friday, 3% today. Bit of a knock over there. Hexaware is also down about 3%. Trent, by the way, is down 5%. So the market is really not happy with the pace of deceleration in growth. I mean, from an era of 50%, then it came down to about 30%. Then the company said they'll do at least steady state 20-25%. But this quarter has been below even that run rate. And I'm talking about top line growth. Trent, should have known Trent. That's the stock to keep an eye out on. Down 5% for now. Let's get Trent up if we can. I think it'll come up. Yeah, 5.5% lower on Trent now.
You know, some of these mid caps, small caps are such big winners, right? I mean, Nigel mentioned HBL. I was just looking at yearly charts on this one. 3 years, it's up 10x, HBL. Forget about the lows in 2020. That's, of course, I mean, that just makes it seem absolutely unnatural. But I'm just looking at the close in 2022, $100. And from there, it's come up to about 1,100. Super strong numbers. Look at the volumes pick up on this as well on HBL. Newland is the other one, right? I mean, again, I mean, of course, this one as well, 2022, I mean, close was 1,600, basically, 1,700. Stocks at almost 20,000 now, right? So some of them, you got to stick with them, which is, of course, harder said than done. Nalco is the third biggest volume-led gainer. It's up 6%, and Nigel was telling us about this earlier. Nykaa is there. Force Motors, of course, such a big winner over the years. Our power is back up about, I mean, our power has come off quite a bit from the highs, but it's coming up today. Lumax Tech, I think we mentioned. Interarc Builders, right? I mean, I think it's had a pretty decent run last 3 days. From about 2,200, it's moved up to about 2,700. 3 sessions flat. So they are into prefab buildings, prefab structures, I should say, and one of the largest actually in that space. Jain Resources is up 6%. Torrent Pharma is up 4%. So out of the gates, I mean, this is a pretty vibrant looking screen out there. 1,600 stocks are higher and about 900 stocks are lower at this stage. Surbhi.
I forgot to mention the sugar space, Prashant. It's a sweet start to the week. All the sugar stocks, look at Renuka, Balrampur, Bajaj Hindustan, between 3-4, some even 5% higher. The reason is that the government has allowed export of 1.5 million tons of sugar for the sugar season. The industry was asking for, I think, 2 million tons. They've got 1.5 million tons. It's still 500,000 tons more than last year at least. So exports coming in, and even the duty on export of molasses, that's been done away with. Yeah. So it seems to be
I think in sugar, I'm not, maybe Manisha will tell us more, but I think sugar prices have crashed. Globally, sugar prices have absolutely crashed. And maybe that is the reason why, I'm just looking at Balrampur Chini's chart here. It's come off very sharply. I mean, I think in the month of August, price was $600. It's at 450. And of course, today, on the back of this, the government directive, more exports allowed, prices are coming up a little bit. But as I said, more with Manisha as we go along. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, good morning. Great to have you with us here. Thanks very much for you joining us. You know, there is this Goldman Sachs upgrade in terms of their view on India. You know, it's basically calling for a 14% upside at an index level by the end of 2026. Sounds pretty reasonable, right? Given where we are. Although the point is how to play it, Mahesh. I just wanted your thoughts on it if you've looked at the note. You know, it's nothing that we don't know and we haven't discussed in terms of the reasons and the sort of thesis which they're putting out. But would you agree?
Yeah. Good morning. So I haven't seen that note, but I think clearly, the optimism is coming in from the fact that we are now seeing the period where we've seen last 4 quarters successively. We have seen earnings growth has been weaker. There have been downgrades to earnings. This is the first quarter where we are seeing that the earnings actually downgrades have altered, and we haven't seen any major downgrade. At least the results which have come in for the second quarter show that it's pretty much in line. And as we step into the third quarter onwards into the next fiscal year, the outlook over there on earnings growth looks better. Again, buoyed by a better top-line growth, and also a lot of sectors, which especially on the consumption side, the auto sector, because the GST cut would see a boost. So I think, clearly, the growth trajectory now at least looking to go back into the double digits is what one is seeing. And the fact that on the global front also we're seeing the talks about the trade deal getting soon. I think expectation is that in the next 1 month, okay, the trade talks with the US should conclude. So that should improve the sentiments. And more importantly, the foreign investors who were kind of selling India last month of October, if you look at, they were net buyers. And clearly also they are also seeing the relative valuation of India is now no longer as expensive as what it was a year back. And that is also helping. So I would say that from here on, I think the market returns should broadly be in line with the earnings growth. Valuations are reasonable, I would say, slightly above the long-term average. But looking at the steady inflow, which is coming in for the domestic investors and with foreign investors coming back, I think the market should do better, at least compared to the last 1 year. That consolidation which has happened has also really meant that a lot of the weaker hands are out. And I think there is fresh set of investors, especially from global side, could come in. So I'm not surprised by the target. I mean, it could be anywhere between 10 to 14% in that range if you take a 1 year perspective.
Mahesh, hi, good to have you with us this morning. So let's talk about high growth companies and the market's way of looking at them. If you talk about the new age space, I mean, and each is charting its own sort of course, right? Nykaa seems to be on a path to profitability. The numbers have been looking better. But if you look at some of the others, I mean, Eternal, Swiggy is still raising more money, perhaps for further investment into the business. So how are you looking at this entire internet space? And now it's a little confusing, right? Because the company that will list today sells eyewear, but even, Piyush Bansal is very clear that they're a tech company at heart. So what do you make of this whole space and the approach to it?
It's interesting. I think in the last couple of years, we've seen now quite a few companies into this new age technology or the so-called disruptors which are there. And that is now, and quite a few of the IPOs recently and more in the pipeline would mean that you will see a lot more options over there in that space. And I think especially when we look at some of these high growth companies, they are coming in from a phase where very low profitability or no profitability. And that's where the initial period is very difficult to value them on a price to earnings multiple or even EV to EBITDA multiple. And that's why we would normally look them at slightly longer term view. We would try to forecast their earnings for the next, say, 5 years, because over the next 5 years, the high growth would translate into decent or stable EBITDA margins and also a reasonable profit for us to really value them on a traditional multiples, whether it's EV, EBITDA or P multiple, and then discount that forward. So on that basis is what we will look at it. Obviously, the competitive intensity also is very important because just like what we're seeing in the quick commerce space, the intensity is still fairly large, and with multiple players trying to boost their balance sheets, that can continue to bleed. So I think that's another factor which needs to be borne in mind, that how the competitive intensity is, whether it is settled. If that is the case, then it's fairly easy to really project the earnings going forward. So this is a space where we would take small exposures, build up a basket, and then watch the progress whether they are meeting these high growth targets, and then progressively build exposure in that space. But again, that's a space which is opening up pretty well, and we've seen good performance on some of these stocks in the last 1 year when the market has been flat. So one can't ignore that sector, and most of the new age companies are good quality names. They are dominant in their space. They are market leaders, and that's what gives us comfort over there.
All right. Hi, Mahesh. Good morning. Good to see you, Ben. What about Lenskart? In a few minutes, we'll have the first rate on that one. Plenty of debate. Great business. Valuations questionable, but great response is what they got. We'll have to see what is going to be the listing price. But any view on this one?
Well, I wouldn't. We have also participated in this IPO. Would not like to comment specifically on the company, but again, good companies, good management, strong market positioning, a significant moat. I think these are the factors which we look at in some of these names, and And while the initial valuations would look expensive, it's more about also looking at the promoter, right? If we like the vision of the promoter, his ability to not only play that market, but also to pivot at various points in time to really give a new dimension. And these are some of the things which we can't really kind of encapsulate in the multiples. And those are factors actually which we look at when we look at a company, say like Lenskart or any of these new age companies.
So Mahesh, what's the pivot, if any, if I talk about the overall portfolio call that you're taking right now? As we get through the second quarter earnings, any more changes? For instance, let's look at consumption, because that's the big hope, right? Second half, that the consumption side of the market will revive in a bigger way. So have you made any pivots to that effect? And if yes, and in which pockets of consumption?
So, yes, when the GST cut and the whole change in the narrative, towards consumption, which has been an underperforming sector now for the last more than a year. So that makes it much more interesting for us to look at it and names over there, which and it's also a sector, especially which is underowned in a sense. So within that, I think auto is one sector which has already seen some amount of re-rating and rally, but I think it will still continue. I think the growth rate, what we are seeing in the festive season, if that sustains, though even at a slightly lower rate in the next 2 quarters, I think this is a sector which can still see some amount of outperformance over there. Consumer staples is another sector which is still not, last quarter was not that great, but the real impact of the GST cut will come in the ensuing quarters. And there the growth has been fairly weak. We would anticipate that with the overall interest rate cuts, higher disposable income, one should see a better volume growth across in the coming quarters. And this is a sector, again, which is underowned. So that can be a good contrarian play to play out, where we could also see margin improvement because the commodity pressure, which was there last year, seems to be easing off over there. That's another, I think, pivot which one can look at. But by and large, I would say that we are, the market, we are not seeing any big tailwinds across the sector. So it will be more a bottom-up kind of a market. I think companies are also reacting more to their financials, whether it is positive or negative. So it's going to be more stock-specific rather than taking any large sectoral call at this point in time.
Okay. All right. Fair enough. So more of a bottom-up approach. Got that. Mahesh, good conversation. Thank you very much for joining in. You have a good day and we look forward to connecting again soon. Well, as we move back to corporate conversations, just a quick glance at the screen, and it's still pretty steady open, about 66, 67 points higher. It's more about individual stocks today. For instance, transformers and rectifiers that Nigel pointed out slammed on bad results, or, well, let's just say, less than expectations result. 20% lower on that stock. Medanta is down. Global Health is down about 3% as well. Nalco is soaring, about 8% up on Nalco. Torrent Pharma, 4%. So it's all about individual result reactions playing out. Speaking of result reactions, the market gave a thumbs up to Bajaj Auto second quarter performance as well. We've seen a pretty healthy set come through for Q2. Resilience coming in terms of the margin growth, largely aided by the move in the rupees as well, and the export volumes looking healthy, looking pretty healthy, good recovery over there. Let's put all of this in perspective and the way forward for the company. Mr. Rakesh Sharma, the Executive Director at Bajaj Auto, is with us. Mr. Sharma, thank you so much for joining in. Always a pleasure to have you with us. So it's the export markets are really fired up for you. The margin picture is looking very, very robust overall. But I want to start by getting a color on the domestic piece, because the first 2 quarters of this year have been very subdued for the domestic business. But now with the GST cuts and the festive season looking good, like you told us last time we spoke, what is your expectation and, what is your projection for H2 for the domestic two-wheeler business?
Good morning. Yes, the industry was sort of languishing in the April-August period. In motorcycles, it was a tad negative, -1%. And I must say the GST rate cut timed with the festive has catalyzed the industry back into growth. So we are looking at, give or take a few percentage points, but in the band of 6 to 8% growth, but in the coming quarters. However, the other story which is sort of hidden under those overall numbers is the quality of growth. What we have seen that in this 45 day festive period is that in each sub-segment, the higher end variants and the better products, the better models have far outstripped the performance of the base models. So whether it's a 100cc, whether it's a 125cc, whether it's above that, we find that our N series, NS series, which are top of the line products, our KTM and Triumph models, they have grown very fast. So it's not just the quantum of growth getting corrected, but I think it's the quality of growth, which is now again reinforcing, the upgrading trends which were there, but they've strengthened them further. So that's very good for us because, as you know, we focus on the top half in the 125cc plus, and we are expecting, therefore, to harness this trend.
So that's good to hear. And when you say that in the second half, industry is going to grow at 6 to 8%, what does that imply for Bajaj Auto? I mean, how much better than industry, or would you be in line with the industry?
Well, our focus is the 125cc plus segment, and we hope to outpace the industry. We saw, a reversal of trends somewhat in the September-October period, where we have begun to claw back some market share. So going forward, basically in Q4, because the remaining parts of Q3 are going to be a little, will languish after the huge festive. But yes, come Q4, and we think that we should be expanding market share in our core strategic area of 125cc.
Can you give a sense of how much that expansion could be in your, your area of focus, which is 125cc plus? I mean, where is the market share right now? What percentage point gains do you think will happen looking at customer preferences?
Yeah, so in October, our assessment is that we have come in at about, I would say, from a registration point of view, we have come in at about 21%. We would be looking forward to adding to that. Now, that's a mix of, competitive reaction and how exactly the segment grows, etc. So the lineup for us and the momentum from September, October is suggesting that we should add to market share, but precisely how much, I'm also very keen to understand that, but I think that will reveal itself more by March or so.
All right. Hi, Mr. Sharma. The other, the strong point has been exports, and that's been seen a very, very healthy recovery. And what's heartening to see is now you're not dependent just on one geography. You've got it spread out a little bit. So a couple of questions out here. I think you clocked 2 lakh units. You expect to hold on to these sort of numbers on a monthly base? Point number one. And point number two is in Nigeria, I think the festive season starts. So what kind of a run rate should we look at from Nigeria?
Well, we've reached the 2 lakh mark after, I think, about 40 months. So that was a very welcome outcome. We are hoping to maintain the growth tempo, which is between 15 to 20%. There is a little bit of seasonality, which is there where, after the festive, which generally in LATAM and all starts from Thanksgiving and extends up to New Year. So that is almost over from a shipment point of view. But I think we will continue our 2 lakh plus performance hopefully in November. And then we will see a slight dip. But I think the growth tempo will continue. Nigeria is in kind of an equilibrium where we are doing about, between 20 and 30,000 units. This is also season time for Nigeria, and we are hoping to really capture a disproportionate share of the growth. But Nigeria has not yet come back to, the 50, 60,000. In the past, when we have done 2 lakh plus, Nigeria would account for 50, 60,000. And currently, it is accounting for about 25,000. So you can imagine the kind of swing which has taken place in LATAM and parts of Southeast Asia, etc. So we will see how Nigeria goes. But it seems to be in an equilibrium in this 25 to 30,000 range. And but if their macroeconomics, if their currency is stable, that country is capable of much more. But we are going to take it month after month.
All right. A shorter conversation than usual, Mr. Sharma. Thank you very much for joining us. Really appreciate your time and best of luck as you continue to execute. Piyush Bansal of Lenskart is speaking at the NSE as he gets ready to ring the bell, bring Lenskart into the listed space. Listen in.
Lenskart Foundation exists to make vision a right and not a privilege. It's deeply personal to me. When I left Microsoft, it was by a speech from Bill Gates, which said, "From those to whom much is given, much is expected." The foundation is led by my wife, Nidhi, and it keeps purpose alive every day at home. Years ago, I met Ronnie Screwvala, who became an investor. And then I saw on the internet a Swadesh Foundation video of an eyewear van. I immediately picked up the phone and called Ronnie. "This one is ours to do, not yours." That moment stayed with me because I knew the responsibility belonged to here, with us, with me. Over time, it's grown quietly, one village, one school at a time. Not to make headlines, but to make vision reach where it's forgotten. When one child sees clearly for the first time, that's our true profit. None of this would exist without the people who built it. If there's one thing that I've learned in this journey, is that a company is nothing without its people. The engineers who write the code, the designers who shape every curve of the frame, the optometrists who test eyes, the store teams that open the shutter every day before sunrise, and they greet the customers, our home eye checkup teams which visit home. You are the reason Lenskart exists. You are the builders of this dream. A big round of applause for all of them. To my co-founders, Amit, Sumit, and Neha, and to those who have been part of this journey, Ramnik, Ashwini, Shuji, Take, Marco, Borga, Surain, the GeoIQ team, and many more who care about this dream as much as I do, and usually even more. I'm forever grateful. At Lenskart, we believe profit is oxygen. It keeps us alive. But purpose is breath. It keeps us human. Lenskart has always been a purpose-driven organization. For over a decade, we have stayed focused on one single mission: to make high-quality eyewear accessible to all.
All right, well, that's Piyush Bansal, and we'll hear more from him in a bit from now. I think about 20 minutes more, and the bell will go, and Lenskart will be part of the listed universe. We take a break. AkzoNobel reported numbers, and we'll talk about them with, of course, focus on the outlook. Paints in focus on the other side.
Welcome back. Well, we have got the initial rates with regard to Lenskart. It's settled at around 395 rupees. That compares with the issue price of around 402 rupees. I recall in the run-up to this IPO, there was some kind of, premium that was there, which got totally nullified on Friday. And now I think it's opening up, back in line with what the grey market discount was suggesting. So I think around 3-4 rupees is what it was suggesting. It's opened a little bit lower. So we'll just get back to that in just a bit. And Mangalam will join in as well to give us a quick check on the valuations. Let's focus on a couple of good numbers. Nalco, the top line growth was close to around 7.5%, which is good. But the real beat came on the operational performance because the operating EBITDA, that popped up by close to around 25%. which meant the margins came in at around 45% or thereabouts. And both the segments, if you're looking at the chemicals, which is actually the alumina business, out there they clocked close to on 620 crores. Much better sequentially, much better on a year-on-year basis as well. And the aluminium business, well, that came in at close to around 1,200 crore rupees, a direct beneficiary of the LME aluminium price move, and that was on perfect display. So on the top line, there was a good growth, and on the cost front as well. High amount of captive coal, it appears, is what they consume. So cost of power was down, and employee cost as well was a little bit lower, which led the profit number to pop up by more than 35%. On the volumes front, the alumina volumes was up by close to around 40%. A sweetener came in because they've gone ahead and given a dividend of close to around 4 rupees per share. And they've also promised that currently the alumina capacity is at around 2.1 million tons. There'll be 1 million tons that will be added in the middle of 2026. So for everything together, strong trends in the aluminium market. Nalco is flying away, up 7.5%.
Okay, and I think we do have the management of AkzoNobel now joining in. So let's discuss the quarterly trends. The company reported a mute set of numbers. Numbers were slightly lower on account of course, the carve-out and sale of the powder coatings business. Rajiv Rajagopal, Chairman and Managing Director at AkzoNobel, is with us. Mr. Rajagopal, thank you so much for joining in. So let's start with the broad trends first. In terms of volumes, Q2 and beyond, when the sentiment turned around thanks to the GST cuts, I mean, what are you seeing and what are you projecting for the rest of the year?
Good morning, Surabhi, and good to be back, and thank you for having me on your show. Look, I think as far as volumes are concerned, the last quarter after the prior quarter was a strong quarter. We grew 3% in volumes. Remember that our growth, both in decorative paints and in our coatings businesses, largely come through premium. So I think one of the great things that we've seen, which is, I guess, slightly different from some of the other industry players, is the fact that we grew in premium. We grew mid-single digit in premium, and that clearly shows us that we are poised well. Where we've had an issue is really on the larger part on the mass economy, because there was heavy discounting and pricing-led actions in the market, and we chose to play very selectively there. We've come back pretty strongly. We also have taken some price corrections. Yeah, so I think from a volume perspective, I think we are now going to move to a high single digit. In the coming quarter, in the current quarter, we should be at between mid to a high single digit, and then go to double digit in the next quarter. That's the volume.
So that will take the total second half volume growth to
about a mid-single digit now, because the reason for that, Surabhi, is that if you look at the volume growth is largely coming from mass economy, construction, chemicals, and putty. And those are not the segments which have been our core competencies. Construction chemicals, we are just about to launch in the next month in December. So hence, you would see a slight gap. But once we launch, we've tested our products. We do a lot of checks at our lab before we bring it to market, because we want to make sure that our products are of Dulux standards, and hence we've taken a bit of time rather than rushing in. But those are slightly lower margin products, and hence for us we need to also make sure that we are closer to market, because otherwise it's margin dilutive, right? So our entire infrastructure setup, etc., is taking time. But once we get in, you would start seeing the volume growth coming back to double digit.
Okay, all right. So what should margin look like then, for the second half of the year? Because there will be some benefits, sale of the powder business. You also have lower royalty rates as well. Give us a broad range, sir.
Yeah, so Nigel, good morning. So, just a quick one. First and foremost, you have to look at the revenue and all the figures net of the powder, the carved out business, which is powder, IRC business, etc. And hence, if you look at from a revenue perspective, we were down first by about 1.5%. Let me explain that. So I told you volume has grown for us. Our mix has not been hugely adverse. Our entire drop is on the price. And why? Largely led by decorative, because we are transitioning, as you know, to JSW paints eventually. So hence, I think the brief, and we are following the brief which we've got, which is to get aggressive and make sure we participate in every segment and drive top line. So the focus is going to be hugely on market share. But to your question, I think I would like to say our EBIT margins we will keep, as I said in the investor call on Friday, guidance between 14 to 16%, while we are aggressively focusing on our top line.
Since you brought up, the new Akzo, so to speak, with the merger moving ahead, just tell us what else is changing. So one clear, change in strategy or renewed push that we're seeing is that you want to be in all segments. The brief is, like you're saying, is to be aggressive. Give us some more color. What will that aggression really look like? And how is the overall competitive intensity? Very interesting times, because we were speaking with Berger Paints and we were talking to them about what the changes at Birla Opus really mean. I mean, the exit of the top executive there suddenly got the market very excited, thinking that the aggressive intensity from the Birlas is going to die down. But from what you say, I don't think it's dying down from the JSW group.
Well, look, I think, Surabhi, let me take the second part of your question first. Look, firstly, I don't want to comment about people. I think it's not right. We respect all players in the market, and I think that's the way we've been. Coming specifically to, do I see the competitive intensity slowing down? No, I don't. I think on the contrary, I see this going to continue for about a year. I mean, people, and this is, I'm not just talking of, the Birla Opus, but if you look at all the players who've come in, they put sizable amount of capex and money into the businesses. So we should expect competitive intensity to continue, at least for a year, if not a year and a half, is my view at this point of time. And so we are poised because, to me, I think it's important to have a ground reality of what it is. Yeah, I think, yes, there has been a recent trend of, of Birla Opus maybe in a month or quarter, but I don't think that's you're comparing to a standard which is, if you look at what they've achieved, is not small, and hence we don't want to take, we take notice of every competitor, and we don't want to sort of, let go right now. On JSW Paints, I think it's very important for Mr. Parth Jindal. I think it's more appropriate for him to answer once the entire deal closure happens. I think, and perhaps after that, maybe it's appropriate for me to comment, Surabhi.
Okay, all right. Let's talk about your business then. Post the sale of the powder coatings business and the other smaller business, you'll have some cash, right? Some liquidity has come in. How do you use this money?
So we are going to use it to continuously drive growth. I think the focus has been, Nigel, to be consistent with what I've said in my previous interviews. We are investing behind our brand. If you saw, we just did a campaign on Lage Shandar, Chale Shandar. Remember that in 2021, we were the first player to actually bring this entire warranty into the market. But what you've seen is both the largest player and the recent challenger, both trying to stake claim by putting huge amount of monies on the campaign. Hence, I think our agency did a fantastic job with our marketing team. We said that, look, it's quality that delivers warranty. And we are very clear that Dulux stands for the best-in-class quality in paints, at this point of time, anywhere in India, if not worldwide, right? So hence, our focus is to bring that simple message to our consumers, and we are seeing some good uptake. The fact is we grew mid-single digit in premium. It's slightly different from the narrative that you've heard, maybe other than one player. So I think that tells you that's a testimony of the fact that we continue to focus on premium. You can continue to expect a lot of innovations coming in the coming months and in the quarters ahead, and both. And we are going to straddle across price points. We're going to straddle across the portfolios and start intensifying our efforts to start getting market share.
Mr. Rajgopal, thank you very much for joining us, sir. Good speaking with you, and good luck to you and your team. It's always great speaking with you here on CNBC-TV18.
Thank you.
Well, let's just go across to the management of Niva Bupa now. So, general insurance industry growth slowed in October, with certain players performing strongly. We have Mr. Vishwanath M, ED and CFO of Niva Bupa Health Insurance. Mr. Vishwanath, great to have you with us here. Good morning. I don't think we've spoken after your second quarter numbers, which is July to September. And of course, after that, you've also reported, October numbers. That is the monthly numbers as well, which have now come through. So, I mean, I guess we can go backwards, right? Look at the latest, which is what you've seen in October. So 50% retail growth is what we pick up you've managed to do in October. That's a monthly number. And the ticket size in October is some 15% higher. These are very strong numbers. Could you give us a sense of what happened in October?
Yeah, good morning and thanks for inviting me to the show. So let me just decode October numbers for you. So one thing which has happened is this GST, and it is a very, very positive impact. And as you know, we all decided Specifically, I can talk about our company to pass on the entire GST benefit to us. And the idea of this is that volume should increase, and that's what we are seeing. So so the reported numbers are slightly different. So 67% overall, 50 plus 56% retail. But if I just give you a like-to-like number, which is without 1/n, and that's what we have been, suggesting to look at. So in the Q1, in fact, in the H1, if we see April to September, our retail growth like-to-like was 28%. The same number for October is 40%. So that's the kind of uptick we have seen. So 2-3 reasons. One, of course, is GST. There was already very good awareness of health insurance post-COVID, but this has also gave boost to affordability, the GST exemption. And second, we launched a product, Reassure 3.0, that has got very good reception. So this is a combination of 2-3 things. Of course, there's higher awareness, there's interest for this category, and that's now converting into actual sale.
Yeah.
And we have products.
Can I come in, sir?
So these are yeah.
Yeah. Sorry, you're saying that retail premium growth in H1 was 28%, right?
Yes.
And in October, that like-to-like number is up 40%.
40%. That's right. Yeah.
And the entire GST cut has been passed on to distributors.
That's right. Yeah. To customers. And our GST, this exemption is passed on to customers. What that means is we have not increased rates.
Yes, that's what I meant. Sorry. Yes. You've not, you've passed it on basically to end consumers.
Yeah, that's right. Yeah.
Okay. And this 1/n, which is basically accounting for premium over the term of the policy, these numbers are based on that method?
The one which I quoted you, that 40% retail growth are without that 1/n. With 1/n, it is higher because, this was implemented 1st October 2024. Now the premium which was deferred has started coming in, and which is true for the entire industry. The numbers are there in front of you.
And why is the average ticket size gone up as well?
So
any particular reason?
Yeah, one is related to Reassure 3.0, the new product. Second is also because people are upgrading their sum insured. Those who are renewing, not only the persistency is high, but they are upgrading their sum insured. So upsell, cross-sell is also one factor. And of course, with the high affordability, people are going for high ticket size products.
Got that. There is also some talk that health and general insurance companies were in talks with hospitals to find some arrangement on rate increases by hospitals. Have you reached any such agreements? You can tell us?
Yeah, so that's one project which has been taken at General Insurance Council level, which is industry body. And they are looking at few things. One, of course, is standardization of tariff, common empanelment, standardization of protocol, admission criteria, etc. So that project is going on. It's slightly longer term.
Okay.
But I understand it's gaining traction.
Last question, sir. Fettletone, which is an investor, they have about 8, just under 8%, and we understand they're looking to sell about 5% of that. Anything you can tell us?
About Fettletone, it is a true north vehicle. Of course, being private equity, it has finite life. At some point in time, they will exit. I'm not sure about the timing. But one thing I can assure you is it's going to be a very coordinated sale. They are very, very responsible investors. So we don't have to worry about supply overhang if that's what you're alluding to.
All right. Thanks very much, sir. Thank you for joining us. Appreciate it. And we'll talk more. I think Lenskart is what we want to focus on. And that's the much awaited listing on your screen. Piyush Bansal and other company officials, along with, of course, family, friends. And I guess I can see Mr. The exchange officials as well. It's starting about 8.5% lower and at about 370 odd rupees or so. So 30 rupees lower on Lenskart. At the word go, that's the first tick which is coming through. One of the most discussed, debated IPOs with regards to its valuations in recent times. So 402 was what the company sold stock at. and it's listed at 395. It's at about 357 at this point in time. So 10 or 11% lower at this stage.
No, but I'd just like to say that obviously, and this is going to be a big headline, that day one of Lenskart, and we don't know, it's still a long day ahead. Right now, the stock's down 10%, but I just want to say that companies like these have a much. This is just the start, and that's what Piyush Bansal said, that this is day zero for him, even though it is listing day. And I just want to take our viewers back to what happened when Eternal listed. There was a fair amount of excitement, and then the stock went through a very, very, deep, rough patch. There were further investments in the business, and then Eternal managed to come roaring back and regained a fair amount of confidence. So, I mean, these are different companies. They're big disruptors, as Mahesh said. And, I think the debate on what Lenskart will really bring to its shareholders, current shareholders and future shareholders, that debate is not going away anytime soon. And, Nigel, I'll be very interesting to see, at what point do buyers start coming? Because with Lenskart, the entire debate was not about the business. I don't think there was anyone doubting the business potential. They're in foreign markets. 40% of their revenue is coming from overseas. They're looking at all kinds of tech. So there was no debate about the business or those who are running the business. The only debate was on the price. The price is adjusting, and we'll see what happens.
Well, that's right. Hard to buy a stock when it comes at around 11 times price to sales, right? So that was the issue of valuations, but no two doubts about it. They built a very, very good business. Business was good. Problem was in terms of the valuations. The stock has pulled back close to around 10% from the peak. And I'll go with you, Surbhi, as you're saying that we have seen various issues where the listing is blockbuster and then the stock loses its way.
Absolutely.
Will this be one of those that, you have a soft listing and then you see some kind of stability? Let's see how it goes. But for the time being, stock down 10%. Oh, now it's down only around 5%.
I think given all the concerns around valuations, etc., tepid listing, what was expected?
Yeah,
So I think it's par for the course in that sense. So it's a 10% lower, and now it's down 5, right? So and it'll move around today till it finally figures out some kind of even keel, some kind of equilibrium. It's just very, very early days. Yeah. Absolutely par for the course, I would say. And that's actually, this is what it was expected as well. So, and that's what's actually happened as well. I hope we get a chance to speak with Piyush now after the company is listed and made its debut. And we'll try and do that. I think everyone is there at the NSE. Our colleagues are also there. We'll try and see, get a quick sense and quick response. We, of course, cut to him earlier making that speech into the listing 20 minutes before, but more as we come through here. So that's Lenskart, one more addition into the listed space. Large company now, market capitalization, I think, big one. Yeah.
Stock's recovering also. We must, keep that in mind. Started almost 10% lower. It's recovering also. So it's telling us that, debate between buyer and seller, it's a beautiful one, and that's exactly what the market is made up of. So right now, Lenskart already on recovery path. Nigel, you wanted to make a point?
No, I'm just, just looking at the volumes. Massive traded volumes in the first minute, 1,400 crores on the NSE itself. Massive, and by the end of today, I'll be interested to see whether or not there are any large funds that come in, to buy into this issue, because you got a big dip of around 10%.
Look at the recovery.
Let's keep an eye out on that. But for the time being, 8% off the lowest. Lenskart going to be a stock that we'll be talking about all through the trading session, and maybe for the next few days as well. More actively, we'll track that one. Slip into a break, come back. Manisha Gupta is waiting for us. She'll tell us about what's going on in the commodity space. Stay tuned.
Welcome back. Well, it's a steady morning for the equity market. Let's find out what's happening in the world of commodities. Manisha, what's capturing your eyes?
Well, plenty of things really, Surbhi, because when you look at the gold prices, we are back above $4,000 an ounce. Sugar exports have got a yes. A lot of pieces to look at, but I really want to come to what SEBI came out with over the weekend, where they are warning on digital gold being offered on online platforms. And this is coming in on various very, very credible platforms. Remember, this place is not regulated, and that's exactly what SEBI goes on to say and warn as well. They say that the digital gold is unregulated, one, it is not notified, not securities, and not regulated as commodity derivatives as well. So it is a bit of a grey area when you look at digital gold in that sense, but we have seen a lot of euphoria around this. It also says, the SEBI notification that also says that it may expose investors to counterparty party and operational risk. There's no grievance hearing into this one as well. We have seen gold prices make 53% of gains in this year, and not everybody can buy a lot of gold, and is the reason a lot of people were buying fractional tokenized digital gold in that sense. Now, SEBI says what you can though buy is exchange traded commodity derivatives, gold ETFs, gold mutual funds are also there that you can buy it via, and then of course there is electronic gold receipts that is tradable on exchanges are the some products that are regulated at this point in time. Anything else that you see in sense of schemes or digital gold, online gold, etc. is not regulated, and SEBI has come out in sense of warning for that one. Another important thing now is to tell you on what really digital gold is all about. Now, this is offered by payment apps. It's offered by some jewelers as well, some fintech companies also. And interestingly, it does allow the users to buy gold for as less as 100 rupees, 10 rupees, even 1 rupee in some of those platforms. So this is something that you see as a 24/7 market. You can buy gold anytime, anywhere. And it usually is the age group anywhere between 25 to 45 that really seems to be buying a lot of digital gold at this point in time. Interestingly, when you look at the key features, what you buy gold in sense of is 24 carats. The other thing is about storage. Whatever gold that you buy is bought and stored in insured third-party secure vaults on the customer's behalf. The other positive thing that a lot of consumers saw within digital gold was about accessibility. As I said, you can buy as low as 10 rupees when you want to buy that fractionized gold. There's good liquidity as well because you can buy, sell, trade at any point in time on market prices there, and redemptions can happen in cash, or you can buy physical gold into this one as well. Now, who offers all of this digital gold? There are very, very strong names coming in here. You have all these fintech companies, online platforms like Google Pay, Phone Pay, Paytm, Amazon Pay, all of them give digital gold. It also is about investment platforms like Grow and Zerodha. You can also buy digital gold onto this one there. Then you have jewelers like Tanishq and Kalyan and Carrot Lane. And you have service providers like Augmont, MMT, CPAM, Safe Gold, Digital Gold also providing that. My final chart should show you on what really is the digital gold market within India. It is an 8-year-old market. Companies themselves have been asking for the product to be regulated because so many people right now have bought gold. Well, actually, when you import 800 tons, digital gold market right now is perhaps 1 to 2% of that. But even with that, the digital gold and wealth tech platform market is valued at 15,000 crores as of now. Industry reports suggest that it's going at a CAGR of 25%. And when you look at the overall number there, well, the UPI transactions when it comes to buy digital gold doubled between the first half in this year itself. And that perhaps is the reason that SEBI had to come out and warn about that. So very, very strong volumes being done. And 2025 clearly has been a record year in sense of digital gold and digital silver buying. Thus the warning.
That's a great point, Manisha, and you explained it so well indeed. Because in the last couple of years, a lot of people just gravitated towards this. It seems simple and easy, and you could buy gold in such small quantities. But the regulators made its stance very clear that we're not regulating it. So if you're buying at your own risks. Thank you for explaining that to us. Well, on that note, we'll take a very quick break. On the other side, we have our special segment, It's the Economy, coming up. Lata will be in conversation with Sonal Desai of Franklin Templeton Fixed Income on US yields, dollar and the rupee.